What's going on, everyone? Welcome back to the Futures Trading Accelerator program. So in today's video, I'm going to be talking about what is support and resistance. Now, obviously, it's impossible to fully write out resistance, so many letters, but anyways, let's discuss what it is and why it's important. So pretty much, just to make it easy, support and resistance is levels where buyers and sellers become engaged and interested in the market. So we can see here, right, let's say 4,200 is an example of right here a resistance level, and 4,000 right here would be a support level. So we have support, which is where buyers step in. And then we have resistance, where sellers get aggressive and start stepping in. So obviously, let's say that, price is just ranging in this zone. Which one would be support? Which one would be resistance? Obviously, the top, the ceiling, would be resistance because price cannot get above. Price is resisting going above that price. And support would be the floor, where, price has support. It's not going to be breaking below there. And the reason why support and resistance exists is, again, because buyers and sellers become interested at certain price points, and bids and offers stack at support and resistance. So let's say this is a super key level of 4,000. Well, buyers and bulls and longs, it's all interchangeable. They're going to want to buy at, a solid price like 4,000, where a lot of other people are going to be buying as well. Now, how does support get broken? Well, when sellers become extremely aggressive and start selling a ton at the bid, well, eventually, if sellers are extremely aggressive, buyers are not going to be able to bid enough contracts to keep it above that level. So when price was coming down, right, like right here, so when price was coming down, maybe there was 3,000 contracts sitting at 4,000. And then price trades and comes down and starts trading at 4,000. Sellers are hitting the bid at 4,000. This 3,000 goes to 2,000. That 2,000 goes to 1,000. That 1,000 goes to 0. And now the next price would be 3,999.75. And then sellers would, keep hitting the bid, and it would keep going lower and lower and lower. And same thing for resistance, where obviously sellers would be hitting and stacking the offer with a bunch of contracts. Price goes up. Let's say this is 5,000. Let's say there is 4,000 contracts again at 5,000. Price is going up, starts trading at 5,000. Bulls are buying at the offer, buying at the ask. Ask and offer are interchangeable. And this 4,000 goes to 3,000, and then 2,000, and then 1,000, and then nothing. And then now bulls keep bidding up the price because they're extremely aggressive, and resistance gets broken, and price breaks out of this zone. Now, an interesting thing about support and resistance is that resistance can become support, and support can become resistance. So let's go to a new page just to make this very simple and much more cleaner. So, we have a range-bound market. Price is just support, resistance, whatever. And now, right, bulls become more aggressive, break above resistance, boom, smash it, bidding up the price, absolutely just taking all the offers off the market, boom, price breaks out. Now, right, let's say just the market being an auction, the market just doing market things, price comes and retests this level to see if buyers are interested again in purchasing at this resistance level that's now turned into support because buyers have bidded up the price and have broken out of that zone. Now, if buyers do, then that would absolutely confirm that this resistance level, which is now a support level, is now a support level. So price, let's say, buyers are interested in buying at that support level again now. Boom, price goes up, and now we trend higher. Now again, the same thing can be for a support level turning into a resistance level. So let's actually do this in another example. So price comes down, sellers hit the bid, break below that support level, and then buyers, bulls, try to prop up the price again. And now if sellers come back into the market and defend this support level, and they get aggressive again and hammer the price back down, then now this would be a resistance level that now bulls would have to bid up the price, smash through that ceiling, and now bulls would have to defend that level so they can keep pushing price back up and make the market trend back up again. So I hope that you are understanding now how the market, moves and how market structure works. And now I want to include a little bit of, market structure and trend into this video. And I'm going to show you what that looks like. So in the market, you only have three possibilities, three scenarios of what price may be doing. The first one is going down. The second one is ranging, moving sideways. The third one is going up. There's only three things that the market can be doing at any point in time. So I'm just going to be drawing, a little thing like this. So let's just go over this hypothetical chart. Now, starts off, yada yada, whatever, going down. This is our first interesting little level here. Why? Because this price bounced, reclaimed for a little bit, but then got rejected back down again. So now this becomes a resistance level. Now price goes below, breaks that, and now gets rejected again here at that low. So now also this is a resistance level. Then price again breaks that, boom, comes down, goes range bound, moves, breaks above this resistance level. So now this would be support. Breaks above this resistance level. So now that would be support. But then, oh wait, price and sellers got extremely aggressive again and pushed the price below all of these. However, buyers got aggressive again at, this level, which is now a support level. Bid it up again, and now price is more bullish. And again, this is not the best scenario of what may happen. If you want the best scenario, we can literally go to the actual market and discuss how support and resistance and market trends would work. So kind of like today, right? We come up, price gets aggressive, comes on down. This kind of looks like we're forming a little bit of support right here. Price is not breaking below this 43.85 level. However, we step below that, sellers hammer it down. Now breaking above 43.85 would be a resistance level. Then price comes back down, 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 moving sideways. Now price kind of is basing out around 43.60. So now where would a support level be? Basically a little bit around 43.60, maybe a little more like 43.52. The thing about support levels and resistance levels is don't use them to an exact T. Always give a little bit of leeway, either a point or two around them, because the market's always just going to be moving a little bit around levels. They're never perfect. So you always want to leave a little bit of leeway to buy at. And if you can see right here, price is now curling back on over. So we'll have to see if price gets defended at around 43.54 or 43.52 and see if that gets buyers interested again in buying. And if it doesn't and price breaks below, well, now, we would have to base out and bulls would have to start bidding up the price, breaking above this resistance, and then keeping price above to make higher highs so that we can trend upwards. And if you see price making lower lows like this and lower highs, that is a downtrend. So when you see price just kind of moving sideways, not as aggressive as this, that's obviously just a range bound market. And then when you see price making higher highs and not making any more higher highs, well, that means the price is still just kind of range bounding. If you saw price come up to 43.70 area, maybe test like 43.66 or something, then go up to 43.80, maybe 43.75, then higher, that would be an uptrend and a strong trend upwards. So again, just to make sure that you guys got that, if a price is in a downtrend, then we'll be making a lower low, a lower high, lower low, lower high, lower low. Then price would come and be sideways. Then, that's range bound, just making those support and resistance levels. And then if price breaks above, maybe retests, breaks that higher high, lower low, higher high, higher low, higher than this point, and then just keeps going upwards, then that would now be an uptrend. So I hope that you guys are understanding a little bit more just about how the market moves. Again, this is not exactly how the market is going to move. I mean, you can see days today. I mean, it's kind of like that, but it's not exact. But you can see price is in a downtrend, 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 but kind of sideways, downtrend, 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 uptrend for oil, and uptrend for gold. So I hope that this really helps you guys. I know it might have been a little bit all over the place, but there's a lot of concepts that I'm trying to tie together here. Support, resistance, market trend, market structure, how price can come down, get bid back up, just all of that. And I hope that, this really helps. If you guys have any more questions on support and resistance, market structure, trends, then just comment below and I'll respond with a super helpful comment back at you, or you can just DM me on Instagram and I'll get back to you pretty quickly. So hope that this helped, and if you like this video, make sure you subscribe because I'm going to keep dropping more just like this one. Thank you guys again for watching, and see you guys in the next one. Peace.